Hey everybody, happy Labor Day. I'm back. It's 9 o'clock on Monday and I'm with you guys. This is like my favorite part of our group is going live. I haven't thought of a cool name for what we should call this time together. I'm thinking like bouncing around the idea of like live at 9. But hopefully I can come up with something more creative than that over the next couple of weeks. And if you think of anything, feel free to drop a comment in the group. Let me know your thoughts. So this month we are talking about my favorite thing ever, investments. And I kind of wanted to spend some time going over two really important pieces of investments to kind of talk about the difference between the two. If you don't know who I am Tremaine, the founder of Mind Over Money and the creator of the group that you're in. Get Your Money Right, the 21-day challenge. A couple pieces of exciting information I want to share with you all. If you've been following me, nice thing I want to share is I got my Invisalign braces off and I'm so excited. So if I'm super cheesy, it's because I'm happy that my 58 weeks of pain are over. So yeah, I'm excited about that. And this past weekend I had the opportunity to go to Made in America and it was epic. So I'm coming down off that high right now. But to jump into it, the two things I want to talk about are stocks and bonds and talk about the difference between the two. And if you're unfamiliar with what stocks are, what bonds are, just kind of help you navigate what those might be if you're interested in beginning your investment journey. So, stocks and bonds. Stocks are available in the stock market for purchase. And what they really are is like you buying ownership in a company versus a bond is more like a loan to a company. So to break it down really basically, I want to take, let's say you have a friend who has a business and your friend's business is customizing sneakers, right? And they think they're really dope at it, but they need $100 to kind of get their business moving, right? And so let's say they think their business right now is worth $900 and they want to get $100 from you. Now, a few ways that you can help them out with this business. You can, if this were a stock, give them $100 and you would own 10% of their business. Your $100 plus their $900 equals $1,000 and you'd have a 10% ownership in their company. The other way to do it is for you to loan them the $100 with some sort of rate of return like stipulation. So like if you loan them 100, they're going to pay you back your 100 plus a percentage for you letting them loan it. It's kind of like taking out a loan at the bank. Like they let you borrow a certain amount of money and you pay them interest on that amount because they let you borrow it. And so with the purchase of a stock, you own a piece of that company versus a bond, you're kind of just like giving them money and then they're going to pay you money for letting them borrow it. So how this will work. Now let's say your friend's company, we'll call it like Dope Shoe Creations, right? Dope Shoe Creations does really, really well and like over the course of the year, the value of that company increases to like $100,000. So initially it was only $1,000, but you own 10% of that company. So 10% of $100,000 is $10,000. So now instead of you owning $100 worth of company, you own $10,000. So your money grew because of the value of the company growing. Now, if this were a bond, the value of the company growing has nothing to do with you because all you did was loan $100, right? Now, the thing that's scary for most people about buying stock is that not all companies increase in value. And so let's say the Dope Shoe Creations company doesn't do that well and they tank out. You own 10% of a company that's worth nothing. And so you lost your $100 because the company didn't do well. And essentially this is how stocks and bonds work and how they differ. And so when we're talking about investing in a company and we're talking about buying stocks, you're buying pieces of ownership of a company. So you really want to understand like how the business is doing and operating if buying individual stocks is something you're interested in, which is not something I highly recommend, but this is how stocks work. Bonds tend to be your safer investment, and I say safer with my air quotes because not all bonds are weighted equally. Some of them are riskier because the company may not be able to pay you back. And so they're rated different ways, and we could talk about that more in depth later. But this essentially is the difference between stocks and bonds. Stocks are buying pieces of ownership of a company, and a bond is like loaning them money. And there are different types of bonds, of course, but that's how the basic ones work. So hopefully this quick tidbit gave you some insight onto the difference between stocks and bonds, and hopefully if you have a friend that's starting a business and you want to help them out, you'd consider buying into their company if they're willing to sell you a piece. So hope you had a wonderful Labor Day and everybody's getting rested for tomorrow if you had off today. All right, good night.